Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Rocket Lab.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis. For anyone watching this company, the story has really changed. It's not just about a small rocket launcher anymore.
No, not at all. We're tracking, a full-on transformation into an integrated space infrastructure leader, right?
Exactly. And the last quarter, Q3 2025, it was absolutely pivotal. It cemented that whole shift.
It's the growth that really stands out. I mean, the numbers were staggering.
They were. They delivered record revenue of $155.1 million.
Which is a 48% jump from last year. That kind of acceleration is, it's massive.
It is. And it shows they're successfully selling across their different services. Plus, they secured a record 17 Electron launch contracts.
So the original business, the launch business, is still firing on all cylinders, even as they grow everything else.
Right. But to grow that fast, you need a solid financial foundation, especially in a sector this capital intensive.
And they've built that up, right? Their liquidity is looking very strong.
Very strong. Thanks to some recent equity offerings, their total liquidity is now comfortably over $1 billion.
That's a huge cushion. It lets them fund all these ambitious projects without, stressing the balance sheet.
But here's the part that I think is the real game changer. The cash flow story.
Okay, let's talk about that.
Yeah.
For a company that's been in R&D mode for years, this was groundbreaking.
It really was. For the first sustained period since they went public, they reported positive operating cash flow.
$48 million over the first 9 months of 2025.
Yeah. And that's not just a nice number. It fundamentally changes the company's risk profile. In a sector where everyone is burning cash, they're actually generating it from their operations.
It moves them from a hope story to an execution story. The business model is actually working at scale.
That's the key. And you can see that operational success flowing right into their margins.
Which are structurally improving. How big was that jump in Q3?
It was huge. They hit 37% GAAP gross margin. And that's on a GAAP basis, the strictest accounting rules.
37%. So that tells you the underlying profitability is real and it's getting better.
Absolutely. A massive leap from where they were a few years ago.
So what's the lever they're pulling? Is it just selling more launches?
It's the mix shift. The improvement isn't really coming from launch. It's coming from the space systems side of the business.
The higher margin pillar, the components, the satellite buses, all of that.
Exactly. As that segment becomes a bigger piece of the pie, the whole company's margin just naturally expands with it.
Okay, so that's the present. But the backlog. The backlog gives us a clear view into the future. $1.1 billion is a staggering number.
It provides incredible security and visibility. And the key metric there is how fast it converts to revenue.
And what's that looking like?
57% of that entire backlog is expected to turn into revenue within the next 12 months.
Wow. So over $500 million is already essentially locked in for the near term?
It gives them a fantastic revenue floor no matter what the broader economy is doing.
So let's break down how they built that. It boils down to their competitive position, this sort of two-pillar mode.
Right. It's all rooted in vertical integration. They have the launch capabilities and the space systems.
On the launch side, you have the Electron rocket. It's proven, it's reliable, it has a high flight rate. That's a huge barrier for competitors.
It is.
Yeah.
But the real genius, financially, is in that second pillar, space systems. That's the sticky, high-margin part of the business.
It's the faster-growing segment, too, right? With components like reaction wheels, solar systems, and even full spacecraft buses. So they're not just giving you a ride to space, they're often building the thing that's getting the ride. So that creates really high switching costs for customers.
Exactly. They offer the end-to-end solution. If you use their components, you're not going to switch easily. It captures the customer through the whole life cycle.
That's a solid strategy. But for the next decade of growth, we have to talk about Neutron. This feels like the real inflection point coming up.
It is the ultimate moonshot. Yes. Neutron is their fully reusable medium-lift rocket.
And its purpose is to fill that gap in the market, right? Between the small launchers like Electron and the really heavy lift vehicles.
Perfectly put. That medium-lift reusable category is wide open. It positions them for mega constellations, for big government contracts, things Electron just can't handle.
If they pull this off, their total addressable market just explodes.
Exponentially. But that timeline seems incredibly aggressive. Management is guiding for a first launch in Q1 2026.
Is that realistic, given the complexity of building a reusable rocket from scratch?
Well, management is sticking to it.
Yeah.
And honestly, the market volatility you see in the stock is almost entirely tied to whether people believe they can hit that date.
Okay, so speaking of execution, let's look at recent wins. The Geost acquisition was finalized in August. What does that do for them?
Geost is all about high-end space-based sensors. This move immediately boosts their profile with government and defense customers.
So it's not about launch, it's about building the sophisticated, high-value payloads that the government needs.
Precisely. And they're getting recognized internationally, too. That R&D funding win from the Canadian Space Agency for their reaction wheel tech proves they're a technology leader.
All this really feeds into that market view of them as the leading public second source to SpaceX.
That phrase is so powerful because it's not just about capability, it's geopolitical. Governments and big companies, they can't rely on just one provider.
They need redundancy, and Rocket Lab is perfectly positioned to capture that demand.
Yes. So let's shift to the near term, the next 0 to 3 months. What are the catalysts investors should be watching?
Okay, number one has to be the Q4 earnings report, right? That's expected in February.
Yes. And everyone will be watching to see if they hit their revenue guidance. It's high 170 to 180 million.
But even more important than the revenue number is the profitability target they set.
Exactly. The single biggest thing in that report will be confirming they hit operating EBITDA breakeven.
And for our listeners, that just means the core business is finally covering its own costs before things like interest and taxes.
Right. Hitting that would be a major catalyst, proving the business has crossed that profitability threshold.
Okay, catalyst number two, constant updates on Neutron.
Any news, successful static fire tests, regulatory approvals, any sign they're on track for Q1 2026, or even ahead of schedule, will move the needle.
And the third thing is institutional visibility, the new 13F filings in January.
Yes. These show us what the big money, the hedge funds, the pension funds are doing. If they kept buying aggressively after Q3, it's a huge vote of confidence.
Okay, so let's touch on the rumors, the things that aren't confirmed but add, some speculative upside.
Right, the optionality. The first piece of chatter is about major contract wins from the Department of Defense. Given Geost and their track record, that seems entirely plausible.
And the second rumor is even bigger, moving beyond just hardware.
That's the really exciting one. Speculation about a strategic partnership with a major cloud provider.
To do what? Enhance satellite data services?
That's the idea. It would push them into the lucrative data services sector. If that rumor turns out to be true, it completely changes the long-term investment case.
All right, we've built a strong bull case, but we have to be balanced. What are the real risks here?
Execution risk, hands down. The Neutron program is complex and expensive. Any major delay to that Q1 2026 target would really hurt sentiment.
And that ties into the second risk, cash. They're still investing heavily.
Correct. They're still in growth mode, burning cash on R&D. The EPS in Q3 was only -3 cents, which was great, but they're not sustainably profitable yet. Any cost overrun on Neutron would put pressure on their capital.
And what about the insider selling we've seen? That always makes investors nervous.
It does. We've seen significant sales from the CEO and a director. But you have to remember, these are often just diversification for early shareholders after a strong run. Still, it's something to be aware of as it can add selling pressure.
Okay, so let's wrap this up with the technical picture. How is the stock actually trading right now?
The chart looks quite resilient, actually. It's been trading comfortably above both its 50-day and 200-day moving averages.
Which is a classic bullish sign.
It is. And that's being backed by rising institutional ownership. The big money believes in the story. Analyst targets are clustered around $50 to $58, but the high estimates go all the way up to 75 or 83.
So significant upside if they keep executing.
Rocket Lab's narrative has just fundamentally shifted. It's not a niche launcher anymore, it's a diversified space powerhouse. The growing backlog and the coming Neutron delivery are powerful tailwinds that I think outweigh the very real execution risks.
So the next few quarters are everything. The Q4 earnings in February and every single update on Neutron will be crucial for defining the trajectory for 2026. This is a story of execution now, not just aspiration. We suggest you subscribe for continued updates on Rocket Lab and other key market opportunities.